Listen, I need you to pay attention to what I'm about to say because this could be one of those turning points where, 5 years from now, you either look back and say, wow, I'm glad I didn't sleep on this, or you regret ignoring the biggest shift happening right now in crypto. We're talking about Ethereum, Stellar, and Hedera, 3 projects that aren't just coins to trade. They're the backbone of what the future of money and digital infrastructure actually looks like. But before I dive deep, do me a favor, hit that like button, subscribe if you're serious about building generational wealth through smart moves in crypto, and share this with someone who's been sleeping on the market. Trust me, you don't want to be the only one in your circle that saw this coming. Alright, let's start with Ethereum. Because whether you love it, hate it, or feel like the fees are insane sometimes, Ethereum is still the backbone of decentralized finance. It's the playground where the big experiments happen, from smart contracts to NFTs, DeFi lending, DAOs, tokenization of real-world assets. All of that, it starts here. Institutions aren't ignoring ETH. They're building on it. BlackRock didn't file an ETF for some random token. No, they went straight for Ethereum. And that's a signal. What ETH has is network effect. And in crypto, network effect is power. The sticky. You can't replicate it overnight. There are hundreds of blockchains claiming to be faster, cheaper, more scalable. But the liquidity, the developers, the enterprise adoption, it all keeps orbiting back to ETH. And here's the kicker, ETH is evolving. With proof of stake, with rollups, with layer 2 scaling solutions, we're watching Ethereum go from congested and expensive to efficient and enterprise-ready. But here's where it gets interesting, Ethereum doesn't have to do everything by itself. It doesn't need to dominate remittances or CBDCs. That's where Stellar comes in. It doesn't need to be the corporate-friendly, ultra-scalable, low-energy ledger. That's where Hedera shines. And when you step back and connect the dots, you realize we're building a financial stack where Ethereum is the base, Stellar handles the money movement, and Hedera secures enterprise trust. That's not competition, that's synergy. Now, let's talk about Stellar or XLM. Because honestly, if Ethereum is the brains, Stellar is the heart. This is the project built for people who actually need crypto the most. Not the Wall Street hedge fund manager, not the Silicon Valley VC, but the average person trying to send money across borders without losing half of it in fees. Think about this, every day millions of people send money from one country to another. Migrant workers sending cash back home. Small businesses paying overseas suppliers. Families supporting each other across borders. And the truth? Traditional finance has been robbing them blind for decades. Fees, delays, unnecessary middlemen. It's insane. Stellar said, enough. They built a network where you can move money, real money, not just tokens, instantly and for pennies. You don't need to wait 3 business days. You don't need to pay Western Union 10%. You don't need to beg a bank to release your funds. Stellar takes all of that and just strips it down to fast, cheap, global. And it's not just about peer-to-peer payments. This is where the bigger picture kicks in. Central banks are experimenting with CBDCs, digital versions of their own currencies. And you know which blockchain they're testing them on? Stellar. The European Union? Ukraine's digital hryvnia? The list is growing. Why? Because Stellar's infrastructure is tailor-made for this. Stable, lightweight, and built for financial institutions. But here's the kicker. This isn't just some small altcoin floating in the market. Stellar has real partnerships. IBM used it for their World Wire project. MoneyGram integrated with it for cross-border settlements. These aren't random crypto startups. These are institutions that handle billions of dollars. Here's the way I see it. Stellar is the bridge. ETH builds the complex ecosystems. Hedera brings enterprise trust. But Stellar? Stellar makes sure the money can actually flow between all of it. Fast, cheap, and accessible to everyone. And you know what's wild? Most people still sleep on it. They're obsessed with meme coins, chasing pumps, trying to flip 100x overnight. Meanwhile, Stellar is quietly positioning itself as the plumbing of the new financial system. That's the difference between hype and utility, between noise and adoption, between a quick flip and generational wealth. All right, let's move straight into HBAR, Hedera Hashgraph. And honestly, this is where things start to feel futuristic. When people first hear Hedera Hashgraph, they think it's just another blockchain. But here's the thing, it's not even a blockchain. something entirely different. It uses a consensus mechanism called hashgraph, which is faster, more secure, and way more scalable than traditional blockchain tech. To break it down, most blockchains are like highways. They can move a certain number of cars before traffic jams. Bitcoin, slow highway. Ethereum, faster but still congested. Hedera, imagine a 10-lane expressway where traffic flows smoothly no matter how many cars enter. That's hashgraph. And this isn't just theory. We're talking 10,000 plus transactions per second, finality in seconds, and ultra-low fees. You can move value on Hedera for less than a fraction of a cent. That makes it one of the most practical platforms for real-world applications. But here's where Hedera separates itself from the crowd. Governance. Most blockchains claim to be decentralized but end up being run by a small handful of insiders. Hedera flipped the script. They said, "We're going to let some of the biggest organizations in the world run this network." And that's exactly what they did. Who are we talking about? Google, IBM, Boeing, LG, Standard Bank, Dell, Ubisoft, and more. These aren't crypto startups, they're global giants. And together, they form the Hedera Governing Council, making decisions, validating the network, and guiding adoption. Now think about why this matters. Enterprises, big corporations, governments, institutions don't just adopt any random crypto. They need stability. They need compliance. They need something that doesn't break under pressure. That's Hedera. And the use cases? Massive. We're talking about supply chain tracking, tokenization of real-world assets, decentralized identity, sustainability projects, and yes, payments. Even the U.S. Federal Reserve's FedNow instant payment system has been tied to conversations around Hedera tech. HBAR, the native token, is the fuel for all of this. It's used for fees, securing the network, and staking. But the bigger picture? Hedera is becoming the enterprise-grade backbone for Web3. Now, tie this back to Ethereum and Stellar. ETH is the foundation for decentralized applications. Stellar is the lifeline for cross-border payments. Hedera is the infrastructure that enterprises and institutions trust to scale Web3 globally. Together, these three form a triangle of innovation that's hard to compete with. And that's why ignoring HBAR today could be one of the biggest regrets tomorrow. Because while everyone else is chasing the next meme pump, Hedera is being quietly integrated into the global business and financial system. The future trajectory of ETH, XLM, and HBAR, 2026 to 2030. If we zoom out and take a calm, strategic look at the crypto space, the real question isn't how high might these tokens go, but rather, how deeply woven into the fabric of the global financial and digital economy can each of these networks become in the next 5 years? Let's imagine the scenarios. What could ETH, XLM, and HBAR look like by 2030 and why? Ethereum, ETH maintaining the world computer. The network effect remains supreme. By 2026 and beyond, Ethereum will very likely still be the world computer. As the first mover in smart contracts, DeFi, NFTs, DAOs, you name it. Even if other platforms emerge, most developers, institutions, and protocols will continue to anchor infrastructure on ETH. As rollups and Layer 2 solutions scale while governance matures, Ethereum becomes increasingly enterprise-grade, trusted, stable, compliant. This is where tokenized real-world assets, institutional custody, and regulated financial products will continue to develop. So, by 2030, we can envision Ethereum firmly entrenched in global finance, used in tokenized traditional assets, serving as settlement rails for digital bonds, tokenized funds, and even central bank experiments. Macroeconomic, regulatory, and institutional tailwinds. By 2030, global regulators may have solidified frameworks that give clarity to smart contract platforms. ETH's compliance-first upgrades, mainnet staking, central bank involvement via tokenized money or real-world asset platforms will cement its status. Large pension plans, asset managers, and sovereign fund custodians are likely to see Ethereum as their default platform for any digital innovation tied to real value flows. So yeah, Ethereum might face new challengers, but its continued evolution and adaptability position it to solidify its status as the foundational smart contract layer of the global digital economy. Stellar, XLM, the heartbeat of global value movement. Real-world use cases fuel adoption. Stellar has always been about real utility, cross-border payments, remittances, stablecoin rails for emerging markets. If, by 2026, Stellar has managed to build bridges between CBDCs, remittance corridors, and tokenized domestic currency issuance, then by 2030 it could be the go-to public network for value rails. Consider this context. The remittance market is hundreds of billions annually, and CBDC pilots are underway in dozens of countries. If Stellar has even captured a small fraction of that, then it's already embedded in global money flows. Enterprise and government integration. By 2030, imagine Stellar being the backbone that allows a digital peso, digital naira, and digital euro to flow seamlessly. Countries with digital banknotes could use Stellar's multi-asset exchange and anchors to settle globally. Further, its adoption by global anchor partners and NGOs could expand significantly, deeply embedding it in developing market infrastructures. Think micropayments, low-fee digital wallets, and low-cost cross-border ecosystems powered by XLM. Ecosystem growth with Soroban. With its move into smart contracts via Soroban, Stellar can participate in DeFi and tokenization without sacrificing scale and cost. So, by 2030, picture Stellar not just as value pipes, but also as a financial rails layer with programmable flexibility. So long as Stellar continues building anchor partnerships, facilitating CBDC rails, and expanding into programmable finance, its use case-driven path could lead it to become the backbone of global value movement. Hedera, HBAR enterprise-grade trust and infrastructure. Governing council and institutional backbone. By 2030, Hedera could be one of the most institutionally trusted distributed ledgers. With names like Google, IBM, Boeing, and Standard Bank on its council, HBAR embodies crypto built with enterprise partners in mind, not just DeFi fans. Imagine Hedera networks governing supply chains, digital identity, decentralized tokenizations, and regulatory-compliant financial services. Its hashgraph consensus offers performance, energy efficiency, and finality, making it ideal for enterprise infrastructure, tokenization, identity, and global scale. With the growth of tokenized assets, securities, bonds, commodities, Hedera could be one of the platforms enterprises and regulators choose for real-world use. Digital identities, carbon credit markets, and compliance frameworks built on Hedera could give it wings beyond currency. By 2030, it's easy to see Hedera powering internal bank-to-bank workflows, asset tokenization platforms, and commercial-grade decentralized applications. So if HBAR continues enterprise rollouts, regulatory alignment, and identity or asset frameworks, by 2030, it could be seen less as a crypto token and more as PY kernel infrastructure for enterprise-grade Web3 systems. Comparative view, 2026 to 2030 trajectories. Ethereum continues leading DeFi, NFTs, smart contract ecosystems. Institutional adoption deepens via tokenized assets and regulated products. Scalability matures with roll-ups and staking governance. By 2030, becomes the foundational layer 1 financial infrastructure. Stellar, XL, cemented as cross-border payment rail in remittances and CBDCs, tightly linked to microfinance and underbanked flows. Upgraded smart contract capabilities via Soroban expand utility. By 2030, acts as interoperable global money mover. Hedera, HBR, trusted enterprise chain with council governance. Infrastructure for tokenized assets, supply chains, identity, DeFi, integrated into regulated financial workflows. By 2030, foundation for enterprise Web3 networks. A narrative of 3 muscles, 1 system. Picture the future of digital economies like this. Ethereum is the canvas, programmable, flexible, adapting to real-world finance. Stellar is the highway, seamlessly moving money across partitions, borders, and value types. Hedera is the secure, regulated backbone, powering enterprise-grade, mission-critical distributed apps. By 2030, these 3 may not compete so much as complement. Why it matters and what's realistic. Institutional interest already happens with Ethereum for tokenization, with Stellar for remittances and digital currencies, and with Hedera for enterprise collaboration. Regulatory momentum. Clarity provides comfort. If Web3 gets regulated floors, these three may benefit by virtue of built-in compliance readiness. Emerging market demand, remittances and digital rails are massive markets. Projects with real utility could grow naturally, not by hype. Network maturity. Each of these networks has established tech infrastructure and roadmaps, versus brand new hot chains with no fundamentals. By the end of this decade, ETH might truly be the financial operating system of digital assets. XLM may be the global rails for everyday value movement, and HBAR could be the foundation of enterprise-grade, regulated Web3. If the world builds its future financial systems on functionality, trust, and compliance, not just hype, these three are well-positioned to be essential infrastructure. Not as pump-and-dump assets, but as functional, embedded, inevitable parts of how money and value flow globally. And here's the reality. If you're tracking crypto, you'd do well to watch these networks not for moonshots, but to see how they become pillars of a new digital economy. Build for the future, watch ETH, XLM, and HBAR shape the backbone of tomorrow's digital economy. Let me know in the comments section which one of these coins you are holding till 2030, and don't forget to subscribe, share, and like this video for more deep dives.